Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back on, Jim.
Ross, Terranet National Bank claiming that house prices in Canada are going up. Are they really?
You know, your listeners have been inundated with housing market commentary like this now, Jim, since starting around 2003. That's when going back, that seems to be where the break was, where reality and marketing replaced one another. This report from Terranet today and their website, House Price Index, it is just continuing on with this train of thought that is leading people into making, financial decisions that they may not have made had the facts been laid out before them. The Terranet National Bank House Price Index, the people who make the index, the economists who work at Terranet and at the bank, who created the index, same as the ones that the Canadian Real Estate Association, will actually the Altus Group, the Canadian Real Estate Association. That said, they're all economists. These people can't even read their own data. So Terranet National Bank in 2014, 2015, the housing market in Vancouver, on their own charts, recorded the highest number of transactions in the month of August. And then in July and 2016 and 2017, it recorded the highest month of transactions in the month of July. Now, what Terranet is recording is closings. So that means homes that could be sold as far back as January are closing on June the 30th. Homes commonly sold in February will close the end of June, the end of July. So they're actually reporting something that took place months before, and they're calling it July. No, those sales were reported by organized real estate months before. Even if they had just simply looked at their own data, where it shows the change in their sales pair count, they would have a little bit of an understanding what was going on if they knew how a housing market functioned. If you look at the sales reported by your local real estate board, so for the sake of the argument, the Greater Vancouver Real Estate Board and the Fraser Valley Real Estate Boards combined, because that's what Terranet is reporting on with Vancouver, you'll see that their sales counts never align with the sales count used by Terranet. You'll also see that the percentage of sales pairs by Terranet, as a percentage of the shares of the total sales, changes radically. Now, my firm understands that is a natural progression of a housing market, because as a housing market slows down, people generally are buying a higher and higher quality of home for the same home buying dollar. Well, what does that mean? Generally speaking, they're buying a continually newer home. The home that they're acquiring is newer. Okay, so if that was true, where would that show up in the data? Well, it would show up in the Terranet sales pair count as a percentage of the total homes sold in the region. That would happen because Terranet only counts homes that have sold at least one other time. So if it's a new home, say it's a home that was built in the last 12 years, odds are that home has not been sold. So when it sells the first time, it's never counted by Terranet. It's not counted till it's sold the second time, which is generally around the 20-year mark. Their economists don't understand. They're reporting the average selling price of a house increased in Canada-wide, year over year, in July. That didn't happen. They didn't do a regional breakdown of the composition of sales that took place in that month against the quality of homes that they're measuring this year versus last year. It doesn't happen. If I said this to them, they would have a blank look in their face. When we went down to present down in the States last year with the appraiser conference, they were blown away by these facts. Initially, you could see a blank look in their face. What the hell is this guy talking about? And then you slowly go through the progression. You can see them start to nod their heads. Oh yeah, that makes sense. Oh yeah, everybody knows that. But at the start of the conversation, they didn't believe anything. And that's what's happening with these Teranet National Bank in the Canadian Real Estate Association's release. The Canadian Real Estate Association did not tell you how the sales shifted towards Ontario in the month of July. It's been a gradual shift for the last 10 months. So even though sales are in the tank in Ontario, because the share of sales was increasing in Ontario, where housing prices are higher, the overall average for the country goes up. Now, if that's true at a national level, imagine at a municipal level in your city, in your province. So in the province of Ontario, the GTAs, the Toronto Real Estate Board, the real estate brokers working at the Toronto Real Estate Board, their share of Ontario sales is increased. Well, since the Greater Real Estate Board of Toronto has the highest average selling price in the province, that means the average selling price increased simply because they started counting a higher share of Greater Toronto Area homes. Now, it doesn't stop there, Jim. It goes on further because this also goes to your municipal level. The Toronto became a larger share of the overall Greater Toronto Area sales, and it doesn't stop there. Single detached homes in Toronto became a larger share of Toronto sales, and it doesn't stop there. The quality of home being acquired in the city of Toronto for single detached homes has shifted drastically in the buyer's favor this year versus last year. So imagine, this is how granular real estate data needs to be. And it's why we have argued the reason why sold prices are more dangerous to the public and we have no problem with them being out there. We're just saying it's more dangerous because of confirmation bias. Because this granular of a breakdown, it doesn't happen. If a higher quality home in the city of Toronto increases their share of sales in Toronto, if the city of Toronto, if single detached homes themselves increase their share of sales in the city of Toronto, the average selling price will increase. If Toronto's share of sales in the Greater Toronto Area increases, the average selling price will increase further. If the Greater Toronto Area sales as a share of Ontario sales increases, the average selling price grows even more. If Ontario's share of sales for all of Canada increases, the average selling price for Canada increases every more. This is happening at the same time that housing prices are falling. You get a rising average selling price while home prices are falling because the home buyers themselves are still spending a little bit more money but buying a huge amount of more homes. There is nowhere that the Real Estate Board of Greater Vancouver in their benchmark price has recorded a 40, 30, 40, 50, 60% house price decrease in Vancouver. Not one single subcategory in their benchmark has recorded a 30% decrease. None of them. Yet, you've got bloggers out there, and you've got Facebook that are littered with examples of homes selling at 30, 40, 50, and 60% off of what they would have sold for in 2016. The same thing is in Toronto here. Housing prices got hammered, but it doesn't show up in real estate stats because that's not how realty math works. When Toronto and Vancouver were both weakening, Montreal was getting hotter. So the percentage change that was taking place there was infiltrated into the Canadian average change, offsetting some of the declines that took place from Vancouver and Toronto. You didn't hear that reported. So today, when Terranet National Bank's economists come out, blah, 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 we can't explain what's going on, so what we're going to say is this is the smallest increase in 10 years. Are you joking me? The vast majority of the Canadian housing stock is worth less in 2019 in July than it was worth in July of 2018, let alone 2017, and in Vancouver, BC's case, 2016. It's nonsense. These house price metrics are only measuring the best home selling in a given month at a given price category. This is why the house price deflation that has taken place in Calgary really has never been reported. But at the same time, at a granular level, at the same house level, the net wealth destruction has been huge. Now, everybody says, well, Ross, what does all this matter if everybody believes it? It matters because this is how a housing bubble forms. And when a housing bubble is deflating, all of these things are going on behind the scenes, and the public is never told about them. The news headlines report the average selling price in Canada has gone up, when at the same time, year over year, it is a wipeout of net wealth of some people. We are now seeing condominiums in Vancouver selling at 15% off their peak price. Okay, so that means virtually the entire housing stock of Vancouver over the last 3.5, 4 years has now transitioned, or 3 years, has now transitioned into a correcting housing market. And this is how every correction rolls out. Everybody can blame it on interest rates, blame it on OSFI, blame it on China, blame it on boomers, blame it on everything. The blame that needs to be falling, Jim, needs to be on the stakeholders of the real estate sales industry. Realtors, their associations, their trade groups, their own personal ignorance as a realtor salesperson, banks, the bank economists, and anyone selling stock who is looking to capitalize on the housing market at this moment in time, i.e. you should invest in bank stocks, i.e. you should invest in softwood lumber, i.e. you should invest in an asphalt, a shingle company. All of these stakeholders have their own personal self-interest. And they effectively hide, and, you have to accept, they're not doing this knowingly. They genuinely believe the crap that they're talking about. But at the same time, at the end of a presentation, where at the start of it, they were sitting there with a blank look in their face, they're nodding their heads up and down, yes, how can we be so stupid? Don't believe what you're reading in the papers from the Canadian Real Estate Association, Terranet National Bank, or any of their talking heads.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener asked that they should ask their parents for help buying their first home.
Okay, so the vast majority of first-time buyers in Canada receive some assistance from family members when they're purchasing their first home. It is an absolute bunch of hogwash to suggest that this is a new phenomenon. Over the 25 years that I was actively selling real estate, I would be hard-pressed to remember a single first-time buyer who was not getting assistance from a family member to purchase that first home. And if I could remember one, they would be an outlier. They would be the prudent oddball in the bunch. It would be that couple who was so frugal it almost defied logic. Everyone else pretty much universally gets help. Asking for help and accepting help are two different things. I don't think there's anything wrong with explaining your situation and allowing your parents to volunteer to help buy your first home. Now, that should not be your down payment. So let me make this perfectly clear. If you cannot save the down payment by simply moving back in with your parent and not paying rent, saving that money instead, and your spouse or your better half doing the exact same thing, then maybe you're not in a position where you should actually be buying that first home. The down payment itself should be something that you come up with because you only have to come up with 5% in Canada today. Now, there are other costs associated with buying a house that you should accept help with. If someone wants to pay your lawyer's fees for you, your mortgage appraisal fees, your moving expense, they want to buy you a new dining room table, they want to put a new air conditioner in for you, those are things that you should openly accept. If they want to cover the land transfer tax, if you have land transfer tax in where you're buying, and you have a parent that says, hey, we'll cover the land transfer tax, that is awesome. If they'll cover the mortgage default insurance, that's awesome. Now, you've got to remember, these things add up to thousands of dollars. So when you hear this false narrative about parents lending their money to their kids so their kids can buy a house, we read that information differently. What we're reading is the parents are paying some of the costs associated with buying that first home versus the parents lending them the money to buy it, or the parents giving them their money to buy it. You should not feel, to start off your home ownership life, that you have been given a hand from your parents, because that is going to set up a potential conflict depending upon which parents gave the money to which spouse, how much they gave. If you're lucky enough to have both sets of parents alive and wealthy enough to be able to offset some of the costs, it's probably not going to be a 50-50 split. So if it's in terms of giving you a gift to pay out your lawyer's fees, your land transfer tax, a new central air conditioning, a dining room table, that's a totally different story. If it's to give you an extra $10,000 so you can buy a $10,000 more expensive home, that's a mistake. I can tell you, after working with hundreds and hundreds of first-time buyers over decades, I know that makes me older than I want to sound. When I go back to visit those people, when they're selling under distress, whether it be a marriage breakup, a health issue, or a financial issue, there was a tendency to be where people were not as self-reliant at the time of the first acquisition, it coming back to haunt them. So, yes, I think you should accept help from anyone who wants to help you buy your first home. I think you can wink, wink, nudge, nudge, get the hints out that the house you're buying may need a new air conditioner and you don't have the money to pay it. or that the land transfer tax, you've got enough for the down payment, but not enough for the land transfer tax or the lawyer's fees. I don't think there's anything wrong with talking about those items. If the money comes forward, you should take advantage of it, because I can tell you the vast majority of first-time home buyers get help in one way or the other.
Is there a percentage or a ratio breakdown how many first-time buyers get help from the bank of mom and dad?
I'm going to say it's over 95%, Jim. I mean, it's just foolish, and this is not new. This is historically. I think when my parents purchased their first home, my grandparents gave my mom and dad some money to get into that house. So, I mean, you have to remember back then, my dad had to go out, work full day at a factory, come home, go out and plow the farmer's field for the farmhouse that they were renting in to keep the rent as low as possible, so that the farmer would offset some of the rent so they could save the money for their down payment for their house. This is the way things were commonly done, just up until recently. We hear people complaining about getting into the market. Well, I'm sorry, my answer is really simple. Just go get another job. You're working 40 hours a week now. Work 60. You still have a great life working 60 hours a week. Now, I'm saying that from someone who worked weeks where I was working over 100 hours a week in the landscape business when my wife and I were saving for our first home. I was newly out of university, was not old enough to start in the real estate business. My parents wouldn't let me start. And I had an affinity for working in the nursery business. We had paychecks where I literally had 102 hours in a single week. I literally lived at work because of frost warnings and everything else. When I got down to 60-hour weeks, I still had 2 days a week off. It wasn't a problem. Now, I'm not glorifying this. I'm simply saying there are lots of options out there if you see something and you want to work to get it. The beautiful part of this country is, if you see it, you can go out there and work and get it. With our dual income, minimum wage, 2-kid, free home program, one spouse could decide that they're going to work 70 hours a week themselves. They could go to McDonald's for their 40-hour shift, and they could go work part-time at Max Milk for 30 hours, while the other spouse stayed home and raised the kids. These are not sacrifice. These are simply the realities of living life. And the sooner that we allow all people to get back to these roots of hard work, and that hard work will get us where we want to be. And I've got to qualify this, because where you set down roots will determine the rest of your life and probably a generation after that. I mean, I think of the parents who currently live in the Greater Toronto area or in Greater Vancouver, in Vancouver right now, Jim, whose kids now are in their early 20s. They lived and grew up in those cities. They have an affinity for the place they call home, the community they call home, and the lifestyle that they call home. And now they're looking out the front door of their parents' home, realizing when it's time to leave, they can't afford to buy into that community. Well, that's reality. Are you going to set up the next generation, your kid, for the same situation? Because I'll tell you, if you think you're going to set down your roots in Vancouver or in Toronto, in that when your kids come of age, when they want to enter the home ownership market, that they're going to be able to buy a home there, it is not going to happen. Those kids will not be able to earn enough money to buy a home there. That's the way the home equity pyramid works. The Vancouver is the Beverly Hills of British Columbia. Toronto is the Beverly Hills of Ontario. As your population grows in your province, those areas become more and more desirable, driving the prices up. Luckily, we've got a correction going on, which is going to offset some of the house price illusion that has been underway the last 4 or 5 years. When the floor is getting close to being reached in terms of selling prices, quality of home for the dollar that you're spending, that is going to be the single best buying opportunity in the next 25 years. Now, whether that takes another year, 2 years, 4 years, 5 years to roll out? I can't say right now. I fully expect the Bank of Canada will be lowering their mortgage interest rate by 0.5% by the spring of 2020. They are going to have no choice. They're in la-la land. They're dreaming. We are in an economy, by the way that my firm measures things, has been in a recession now for over a year. It signaled the recession way back in 2016. The latent metrics that they use are only now starting to show downward trends. I mean, Jim, this is how bad it gets. We know that homeowners spend money eating out directly proportional to what the value of their home is changing, what their wealth situation is becoming. We know that the amount of money spent by families in Canada eating out from January of 2009 and May of 2019 is 100% aligned with the average selling price percentage change during that period of time.
We'll have more with Ross Kay right after the break.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, news sources coast to coast are proclaiming Canada's housing market has reached a soft landing. Is it really a soft landing?
Is it a soft landing? Well, first of all, a crash, which, we've even talked about on the show here, which, we sort of only talked about for the glamorization of the term, because we believe all housing markets simply correct. They're deflating or they're expanding, where house price illusion is inflating. This is, this hasn't changed. The soft landing myth is one that economists have tried to come up with. So the only way for me to explain the soft landing myth is to use a historical perspective. And I'll use the province of Ontario because it commands, generally speaking, almost 50% market share and 50% of Canada's housing stock, around 45%. In the great correction of the 1990s in Ontario, initially we heard a year-over-year change in price being recorded from the peak of 1990, and then we heard a drop in prices in 1991. The following year, in 1992, local real estate boards started to say that prices had started to stabilize. They were actively saying this to the Canadian public. The Bank of Canada at that time, where Polaz was actually working as a young economist, believed the talk by the Canadian Real Estate Association and real estate stakeholders. They believed it then. Well, what they found out was a year later that it was nothing more than a correction bump. We've talked about contraction bumps before on the show. This is a correction bump where a small number of single detached homes that had been purchased years ago were now finally being built, which caused some single detached homeowners in existing homes to lower the price of their home to get it sold quick. Now, if that was all true today, Jim, what we talked about earlier in the show would have to be supported. Oh, yes, single detached home sales did increase in the city of Toronto. Yes, they did, disproportionately to what the overall change was. Same as in 1992. In between March of 1991 and February 1992, the average, the number of home sales skyrocketed. Like it was amazing. It was a 25% year-over-year change that was going on then. Okay, a 25% year-over-year increase. At the same time, houses were selling at 30 and 40% off. Well, maybe then they would have been around the 25% mark. Okay? Sales increased 25%. To give you an example, February of 1991, sales were averaging 25.35% higher, the way that we measure sales. Well, you just heard the same thing in Toronto and in Vancouver, didn't you? Year-over-year home sales up 25%. Okay, and what comes next? Further declines in home prices. There is a key metric in a housing market that tells you whether a market is correcting or it has stopped the correction. Now, I'm not going to tell anybody what that key metric is here because we don't release it, okay? This is an internal number that we use, okay? It's pretty obvious a number if you look at historical transactional data. The number should be something anyone studying the data should be able to come up with. But the way that we're looking at it right now, Jim, odds are we are going to, the way that we measure a housing correction, we're going to be at least another, for the province of Ontario, at least another 2 years before we see prices back to where we could say the correction is over. Another 2 years. What I'm saying it is is impossible for housing prices to increase enough to recover that price. What you're seeing right now is in British Columbia and Ontario, I mean, Alberta's already gone through this. They're into their second wave now. We've been since 2013 with Alberta. Your housing markets are correcting. The housing market is not stabilized. There has been no soft landing. New home sales have not increased. New starts have not increased. None of that has happened. You have real estate sales stakeholders whose businesses rely solely on Canadian families buying homes out there trying to prime the pump once again. That's what's going on. Sales will increase in the province of Ontario over the next few months. That is true. That is the biggest red flag any housing analyst in the world should be looking for about further deflating house prices. The very first time when those sales start to increase, the number of sales, is when home buyers are acquiring a higher and higher quality of home for the same home buying dollar they would have spent last year. So don't believe what you hear out there. Don't believe this soft landing nonsense. And if you're looking for proof with who you should trust, ask someone to supply you the data to show the Canadian housing market has landed softly. Ask them to cite how a 20%, 30%, 40%, 50%, 60% house price decline is not showing up in their real estate stats that they use because they don't have.
Ross, thank you so much for being on the show.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or the show, you can send them to info@housestreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.